All right. What is up, traders? What's up, tycoons? Super excited for today's video. TLT has everyone's attention with treasury yields so high right now. A lot of people are wondering, is the bottom in for TLT or could the bottom be very near? And some people are even thinking about leverage. So we're going to go over UBT and we're going to do a comparison of the performance between UBT and TLT relative to the Fed fund rate. We're going to break it down through many different sectors and years and basically show you guys the performance of these two funds relative to, the Fed funds rate. Now, again, the reason we're doing this and bringing this up and going through these different segments is because a lot of people think that the Fed could be done raising rates if they're not already done raising rates, and potentially that they're going to start cutting rates in the near term future. So we're going to break this down to see, if some type of leverage instrument like this is something you should really buy into. Maybe you should stick with things like TLT. It's the latest installment in our series that I have doing UBT. All right. Also take a look at TMF, which is the 3x leverage. And also I broke down some other ETFs, bond related ETFs as well, that are a little bit shorter term duration and an even longer one such as EDV. So we're going to break down all of that in today's video. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. I do want to mention, if you're new to the channel, I started a completely free newsletter called Investment Intelligence, giving out really good, free, valuable finance content. And I also like to sprinkle in some free trade ideas in there every single week. This was a trade idea on Tesla, going over some of the conditions that we were seeing on the chart. And you can see that that trade turned out very, very nicely, especially if you trade options. Another one was ExxonMobil. Okay, ExxonMobil, going over some of the conditions we were looking for on the RSI and MACD. We got both of those. That was a nice trade there as well. And also SWK. Not every trade is a long position. Some of them are also short ideas. There was a clear rising wedge. We're going over some of the targets to the downside, and you can see how that played out very nicely. So if you guys are fans of free valuable content and free trade ideas, sign up for that newsletter. You can get those emails directly to your inbox every single week. Now, if you ever feel like booking me for a one-on-one personal coaching session, I do those every single month, every single week. I do 30-minute and 1-hour sessions. You can do that directly through the Ko-Fi platform. There's also a link in the description for that. You just come here, click on the commissions page, where this is also where you can request a specific YouTube video on the topic of your choice. I've already started doing some of the viewer requests from Ko-Fi. We'll have some more to come in the future. And if you ever enjoy the content that I put out here for free on YouTube, you can always click on buy a coffee as a simple way of giving a tip or donation. Now, let's go ahead and get into the video. And what is UBT? You may not have heard of it, or maybe you have heard of it and you don't know everything about it. But basically, it's a 2x leverage, all right? And what they seek to do is do the daily performance. So this is a big misconception right here. So they're looking to 2x the daily performance of the ICE US Treasury 20+ year bond index. So it's not going to be consistently 2x, and you'll see that in the returns, right? If let's say if that bond index goes up 1%, that will go up 2%, and then the next day it goes up another 1%. The valuations are going to change because it's 2 times the daily performance. So that can help you out in the right environments. You will see that, and it can also hurt you in some of the wrong environments. So you always want to keep that in mind. Of course, you want to factor in other things such as expense ratios, different things like that, and take a look here at the important considerations. Whenever you go to invest into any type of ETF, especially leveraged ETFs. Now, we're going to start here at the inception of the UBT ETF. All right. And the red line in all of these charts is going to be the Fed funds rate. The blue line is going to be TLT. And then the black line here is going to be our UBT. Now, what we can see here is there's a massive, massive outperformance in UBT, up 123% in this time period versus TLT only up about 43%. Now, remember, it's supposed to be a 2x leverage ETF. But you can see during this uptrend, being that it is looking to capture the daily performance 2x, you can see it actually outperforms closer to 3x, okay, at 123% versus TLT's 43%. Now, what's interesting here is that the Fed funds rate also technically was up during this period here as well and did rise, But you can see how really it played out right here. We have the pause in the Fed funds rate. Okay, that's where these flat lines are. These signify pauses. And then you can see as soon as the rate cuts really start, that's when we start to see a dramatic rise in the price of these. Okay, now there are time periods, as we'll show you guys, where the Fed funds rate is going down, and also TLT and UBT can also go down here as well. So it's definitely something you want to keep in mind, that, you know, it's not always going to be picture perfect. And just as soon as the Fed, just because the Fed is cutting rates, doesn't always mean that yields can't go higher, dropping bond prices. All right. If you take a look at this time period here, we can see again, you know, a little bit more of the correlation. So we're seeing the Fed funds rate up here and TLT down 11%, UBT down 16%. All right. And, you know, you can see this period here where they're initially raising the Fed funds rate, and you see that these funds start to go. And then once they pause and start to cut a little bit, and then they raise back up, pause, you can see that during this time period, all right, we're seeing a rise in the price of TLT and UBT. Okay. And then as they start to raise here again and pause, you know, we see a steady decline, all right, throughout this period. And even though the Fed funds rate actually starts coming back down during this period, we also see that, you know, TLT and UBT were also in a downtrend there. Okay. But overall, through this time period, December 2011 to December 2013, the Fed funds rate went a little bit higher, about 28%. Okay. Even after the drop, and TLT and UBT went down about 11 and 16% respectively. Now, here we have January 2014 to January 2015. Okay. And this is another environment here where we're actually seeing the Fed funds rate going up. Okay. So the Fed's fund rate went up during this time period. UBT went up 78% and TLT went up 31%. Okay. So as I mentioned in the beginning, it's not always going to be picture perfect where, you know, if the Fed fund rate is going up, right, you know, you typically would see bonds go down. And if the Fed funds rate is going down, you typically would see bonds go up. It's not always going to be picture perfect like that. Okay. The Fed fund rate does affect and impact interest rates and treasury yields, but it's not the only factor to consider. Now, here we have January 2015 through January 2016. And we can see, you know, this time period here where the Fed fund rate went up a whole lot. And what do we see? Well, we see TLT and UBT only down a few percent, right? TLT down 3% and UBT down 6.8%. We have January 2016 through January 2017 here. And, you know, we're seeing this time period where initially, okay, they were kind of mirroring what the Fed funds rate was doing, right? They were both rising a little bit here. And then as the Fed fund rate really started to go up a little bit more aggressively, you can see both of these peaked in about July of 2016. And that's when you saw most of the decline. And you started to see a rebound towards the later half. This is January 2018 through July of 2019. And again, we're seeing Fed funds right here going up. Okay, we're seeing UBT and TLT going up here in this time period. UBT is up about 12%. TLT is up about 6%. And then you have August 19th through August 2020. And we're seeing the Fed funds rate going down. We're seeing TLT up 30% and UBT up 63%. So this is kind of the environment that most people are kind of looking at, right? And this is the quote unquote picture perfect scenario that most people are looking for, right? They're looking for the Fed fund rate to start going down in 2024. Okay. And they're looking for TLT to start going up and, you know, funds like UBT as well to start going up. And you can see in this more of a quote unquote picture perfect type environment, you're getting much closer to that 2x performance here. Okay. With TLT up just over 30% and UBT up just over 63%. Now, this is August 2020 through November of 2021. And what's important to see here is ultimately the Fed's fund rate went down during this time period, but TLT and UBT were both down in this period here as well. You can see they're almost kind of tracking along with each other. And then as one starts to rise, the other starts to rise coincidentally here as well. So, you know, this is one of the possible scenarios that you do have to kind of consider, is that maybe the Fed fund rate does go down, but maybe also the value of TLT and UBT go down here as well. Or, you know, you could get that picture perfect scenario. At the end of the day, we can't know. And we just have to prepare ourselves for our investments and try to use as much knowledge as we can. So that's the point of, you know, putting this video and these video series together, is that so you guys have a good idea of, you know, which funds you actually want to play the Fed rate cut if you guys think Fed is about to start cutting rates. And that way you can have some realistic expectations on, what could happen if the Fed actually does start to cut rates. And then, of course, you have February 2022 when they started their recent rate hike cycle. And it's almost impossible to see TLT and UBT because the Fed funds rate has gone up at such a historic pace during this time period, with TLT and UBT down very significantly in this time period here as well. So that's basically it. Okay, just a quick summary of UBT. All right, and you can choose to invest in something like UBT. You can choose to invest in something like IEI, IEF, EDV, TMF. All right, there's lots of many other instruments besides TLT. And so I just want to kind of bring some attention to some of those. As always, research. All right, look into which one you think is going to be right for you. Let me know your thoughts down below. Do you guys think that the bond market has finally started to bottom? Do you think treasury yields have peaked? Or is the Fed funds rate going to possibly continue going higher, potentially driving yields higher, right? Or do you think that they're going to pause and maybe they just have the higher for longer, as they keep saying, and maybe they don't pause rates for a whole entire year, or I'm sorry, cut. Maybe they don't cut rates for a year, maybe even something crazy like 2 years. Okay, I'd love to hear you guys' thoughts, and let me know in the comment section down below.